Hey everybody, what's happening? Happy Monday. Welcome to, let me make sure I've got this microphone running. 1 second here. All right, just checking the AV really quickly. Checking the AV. All right, here we go. Let me make sure that we are good on the testing. Okay, one more thing here. All right. There. Okay, happy Monday everybody. Welcome to Ask an Analyst. This is Chris Pulver here. Let's talk about some stocks, some Forex, some crypto, some options. If you're out there typing a wire, yes, if you can see my screen, hear my voice. We have a really busy week. We've got a really busy week. We've had I feel like we've dodged the bullet for 2 weeks in a row on stocks. And the reason why is I'll show you here in the charts. Let's go to the major indices really quickly, okay? Let's take a look. We've got the SPY on the daily chart right up here. Okay, now the market continues to kind of start these weeks off. We started off on a bit of a rough patch last week. Are we going to proceed to the highs, or are we going to break these recent lows? And so if you can see these little dotted lines I have on my charts, okay, this is the chart alarm at the high at 422.76. This is the chart alarm at the lows at 403. All right, right now, interestingly enough, I just talked about this in a webinar. The S&P 500 is up 11% so far for the year, 11%. And a lot of that is because of this rally right here. This rally right here to start out the year. Okay, this is the first part of the year. It's up 11%. The Dow Jones has been outperforming all the other indices. The Dow Jones is up 12.34%. The NASDAQ is sideways. If not, it's positive. It's 4.2% positive for the year, but the NASDAQ is sideways. The Russell is sideways. So let's go to those. Let's go IWM. Okay. IWM. There we go. Look at the Russell. We are seeing sideways movement, a potential topping formation, massive targets to the downside. You know, this is what's going to be crazy. Let's say that the Russell 2000 finds this yearly target. Okay. Thanks, Kathy. Thanks. Which one? You talking about this haircut or this haircut? Because I had about a 2-week beard growing last week, but it was my birthday last Saturday. And, I noticed that I turned 39. I've got one good year left in me. Turned 39, and I noticed that all my little patches are getting more and more gray. So something about these markets. I don't have any kids, but these markets keep me, on my toes and stressed out. So pretty soon I'll be buying Just for Men for sessions like this. Anyway, so the Russell's going sideways. Now, I was just going to say, let's say that we find the yearly pivot. Let's say from current price, or let's say we break these lows and we drop down to the yearly pivot. We're looking at another 20+% to the downside on the Russell. Now, the reason I keep talking about these yearly targets, these yearly pivots, is look at this. Look at all these major tech stocks. Okay? Look at Facebook. Facebook has not found the 2021 pivot yet. Now, I'm not promising this is going to happen, but let's say we have tech under some pressure. We have, essentially the big tech. Let's say our FANG man stocks. Okay? Let's say big tech has a sell-off. How many of you out there believe that with a sell-off in tech, we're going to see tech also drag the entire market with it? Because I believe that we will, right? I firmly believe that having the market, heavily weighted with the market cap as large as it is, with as many portfolios and 401ks out there holding these tech stocks that have done super well, for the last 10 years. I mean, imagine holding Facebook for the last decade. Imagine holding Google and Amazon and Microsoft for the last 10 years, right? I mean, it's made a killing in the last just 2 years. But my point is, if tech goes south, the market's coming with it. And so let's say if Facebook finds this yearly target, it's totally reasonable to see this. From a technical standpoint, it is reasonable to see that we could drag the whole market down. So here is Facebook down to previous lows. That'd be a 20+% sell-off in Facebook. If you get to the yearly target, that's a almost 24% sell-off. Okay, let's go to Microsoft. Microsoft, the yearly target's all the way down here at 195. Let's take a look at this one. So if we slide in Microsoft, we find that yearly target. That's 19.58%. So this doesn't mean it's a bad thing. I don't mind having stocks correct, okay? Even though there's this massive reluctance to see it happen, I don't mind watching stocks fall as long as I know they're stocks I want to own. Look at Tesla. Okay, Tesla has been thrown into this massive, again, disruptive technology type company. Estimates in the next 3 to 5 years see Tesla at $4,000 a share. All right. If we're trading at $570, how many investors are excited about Tesla going up to $2,000, $3,000? You're talking about a 5 to 6 time return, right? So if we fall another, let's check Tesla here. If we fall from current price down towards the yearly target, that's another almost 12%. Okay. I have pending buys. I bought Tesla here, took profit on the breakout. I have positions here. I have positions here. I do have more positions here around that yearly target. I am going to be holding Tesla for a while. Okay. I will be leveling myself into Tesla, something like this. If it's just a corrective channel, let's say this is my massive swing. This is my low. This is my high. And we have this corrective swing. So if we come down again, I'm looking to buy. Maybe it goes up and finds range highs, comes back down again. Maybe we have to build a base around $500. But if I'm giving Tesla the time to go up, I would hold Tesla, right? I'd hold it with the intentions of getting back to $1,000. I'd hold it with the intentions of breaking through to new highs over the next 2, 3, 4, 5 years. I think most investors would feel pretty comfortable that Tesla is going to find a way to make new highs. Okay. All right. What else do we have here? Microsoft. I mentioned that one earlier. Microsoft can drop another 20% to find that yearly target. How about Google? Okay. Google, yearly target way down here. Let's see what this one has to fall to. If we fall from current price at $22.71 down to $1,500, okay, that would be a 30+% sell-off in Google. Can we get it? Why not? We can. All right. It's not going to be pretty. If tech drops, everything's going to look ugly. Okay. And one thing I want to continue to monitor is volatility. Okay. So in the upper right-hand corner, if you can see this on my chart, hopefully you can read this. It says here, what would be the bearish catalyst? Okay. And so I've been talking about this for the start of the year. So for the last 5 months, I've just been adding more things to this list. All right. And so what I'm looking at is what would it take, or what combination of factors would it take to actually give us a correction? And I say correction because remember, a bear market has to see more than 20% selling off. So are we going to have that 50 and 200 simple moving average death cross? Or are we just going to see some corrections that play out and we see, there's basically this. Profits are being taken. Profits are being protected. I don't necessarily see the world turning bearish in the stock market. I do see insane amounts of profits and wealth that's been generated over the last 1 to 2 years, especially with how, volatile and ballistic stocks have been across the board. I do see profit taking happening. And if this happens to coincide with a raise in taxes, whether it's personal taxes, capital gains taxes, corporate taxes, that's a reality. If it's the concern with inflation, as lumber was up to $1,700 for random length lumber futures. Copper is up 600 or 700%. Okay, lumber's in the last 2 months is up 100% and just dropped like 20 to 30% to just rebound a little bit, right? So I keep adding to this list. I keep adding. Okay, interest rates raising. If we see the 10-year note, the 10-year yield climbing above 2%, it's going to make it a very difficult environment for stocks to continue to push higher. Okay, taxes, increase in taxes, capital gains, changes to corporate tax structure. That's a big deal. Speaking of taxes, today's tax day, right? April 15th is long been the standing tax day. Because of COVID last year, IRS switched the deadline May 17th. So it's already been a weird, complicated, tax cycle. But today's tax day. So whether you're already, already submitted your 2020 tax returns, I hope everyone had a great year, but it's one of the last years that it might be decent because if taxes significantly change, especially if you're a trader, if you're, making $400,000 a year, if you're making over $1 million a year, that's the fair share that everyone keeps talking about, And so I don't necessarily love the idea of let's say you make $1 million and let's say the other person makes $10 million and you have the same tax bracket. That sucks. I'd much rather be the person that have $10 million that pays the same taxes as someone that makes $1 million. So I'm hoping that there's some type of, staggering, because otherwise you're just getting hit so hard if you're at the lowest end of that higher tax bracket. So anyway, what else do we have? Issuing new shares. We haven't really seen a lot of this. We haven't seen buybacks, right? We've seen some suspensions and buybacks. We haven't seen a lot of new shares. Bonds showing growth versus risky stocks. This is why I keep going back to the interest rates. If interest rates keep ticking higher, what's going to happen is all of the wealthy funds out there, let's say retirement funds, 401ks, fixed income, if we start to see that bond yields are starting to improve and interest rates start to improve, you're going to see basically an exodus from growth, which we've seen over the last 12 to 24 months, like aggressive growth, and all the wealth that's been generated. People are going to want to start to protect that. And if you can protect that wealth with a guaranteed 2.5%, a guaranteed 3%, stay up at least with inflation, okay, you're going to see a lot of forced investors that were taking on more risk to play stocks. And now they're going to start playing bonds. They're going to start playing dividend stocks. They're going to go to very low volatility, very safe place. And so there's going to be, again, a lot of profit taking, which are another reason for the bears to have their way, to show that like, oh my gosh, the market's bearish. It may not necessarily be bearish. It could just be a combination of change in structure, change in taxes, profit taking, and reality. If interest rates are rising, okay, if interest rates are rising, that's a concern. We shouldn't see strong stock markets, strong dollar, stronger interest rates. Usually that's not the case. What's been happening is the dollar has been the sacrificial lamb for a stronger stock market. We've seen the dollar hit so hard since last August. It's at multi-year lows. It's at multi-month lows. And I mean, I think technically the dollar is set up for some near-term strength. And so I'm still long in Forex. I'm still long the dollar. I'm still looking at 4 particular pairs. I like dollar CAD long. I like dollar Swiss long. I like Aussie dollar and New Zealand dollar short over the next 1 to 3 months, both of them. Okay? But I like dollar strength in the next 1 to 3 months. Like, that's my plan. When it comes to other currency pairs like the Japanese yen, I have some exposure on Japanese yen pairs. I'm short Aussie yen. I'm short CAD yen. I'm short Swiss yen. I'm short pound yen. I'm looking to get short New Zealand yen. That's it. Like, that's 5. That's plenty of exposure. I'm not in the dollar yen because it essentially trades strong and weak is weak. Like, they both, dollar and yen, are pretty much tied together right now. Euro yen, pretty similar, kind of tied together. So, but I do have some yen exposure. And I'm looking for, right now it looks like the yen technically is due for some strength. And if we see the yen looking for some strength, then that means we might have a sell-off that's lining up in the stock market. So I like still being long volatility, which is why I'm showing you the VIX right now. I like being long volatility. I'm not quite there. I get this question a lot. I think a lot of traders have been asking me if they traded with me last year in my Flex trading room, we were long volatility, like right in the beginning of the year. And we made a lot of profit from March, COVID crash in February to March. We made a lot of profit being long volatility. We made a lot of profit being long inverse ETFs, which those are the type of instruments you can play when the stock market sells off or drops. Those inverse ETFs can rally really aggressively. Okay. So I'm not as bullish on inverse ETFs, which is another way of saying I'm not as bearish in the stock market as a whole. I think what we're going to deal with is this market wants so badly to just keep grinding higher. The environment is trying to maintain this like all out assault on just stay bullish, stay bullish, stay bullish. Don't ever let the market drop. It's like the environment is very conducive for that right now. Super low interest rates. Okay. Everybody has money they want to spend, and they're trying to put it somewhere. And if you're trying to put excess savings or excess capital into let your money work for you, that's going to come into stocks and investing, right? You're going to put something in the markets. So that's why we keep seeing like these aggressive levels are defended. There's still great structure. There's great support. We've only had about a 4 to 5% correction. In fact, we had about a 4% slide in the Dow, a 4% slide in the S&P 500. We saw about a 7 to 8% slide in the NASDAQ and about a 7% slide in the Russell. So we're not even talking about bear markets. We're not even talking about correction territory. Okay, correction territory is 10+%. Bear market territory is 20+%. We're nowhere near those levels, right? So there's still a very collected bull market sentiment right now. And so having said that, we look at something like the IWM and see that price is sideways. We look at something like the NASDAQ or the QQQ, and you see that price is it's having a heck of a time going higher, right? And we could have this possibly stretch into something like this, where maybe we start to form this type of topping pattern. maybe this thing finds a way to go back up here, but if it drops, there's that yearly target all the way back down, and there's your 20% sell-off in tech, right? And it could be not only all your major tech stocks, but it could drag the whole market down with it. So all I'm saying is this. If we start to see the big tech stocks break down, don't be surprised. Okay, on the flip side, are there recession-proof stocks? Are there ways to make money? If this is dropping and everything's going with it, are there ways to make money? Yes. Okay, there are inverse ETFs, which we talk about in my flex room all the time. There's about 40 different instruments you can trade. I like to stick to the single and double leveraged ones. I don't like to get super aggressive on them because they can be repriced. They can have splits. They can have all sorts of weird stuff as price just refuses to go somewhere. The timing, however, if we're sitting at these crazy lows and an inverse ETF is dirt cheap, I might throw a few bucks at it, and over the course of the next maybe 1 to 3 months, maybe 6 months, maybe that little test of the level could be, maybe a 25 to 50+% move. But the timing of that can be very difficult. So we have to watch a lot of stuff. That's what's happening between trading rooms, not just my trading room, but Tyson's trading room, Gary's trading room, Chief's trading room, our analysts on demand. We're talking about this stuff every single week. I'm watching these indices closely. Okay. One thing I'm also keeping an eye out for, I've talked about this in my YouTube sessions. Okay, on my personal channel, my YouTube sessions, I've been talking about ARK. Okay, ARK Investments, Kathy Wood. She's live every week on YouTube, just talking about the macro picture, what they're doing. And look, I know that she's not going to downplay their decision making. They're looking at a 3 to 5 year outlook on a lot of their companies that are involved in their ETFs. They have 5 or 6 ETFs that are all about technology. Right? There's internet technology, there's fintech, there's space exploration, there's disruptive technology, there's all sorts of stuff. But I like where it's at technically, and this is what I started doing last week. I started to buy ARK, ARKK. I started to buy this last week at $98.71. I'm in. Okay, there's a couple bank stocks that I'm in. I'm also in. I'm looking for some growth on things like United States Steel. This is X. This is a value stock. I want to buy as much as I possibly can of United States Steel. I want to buy as much as I can of CLF. I want to buy as much as I can of some bank stocks. Like, I'm looking for stocks that are relatively inexpensive, relatively low volatility, and I'll use those as my accumulation. I will add more every single month. And I believe that, my overall bias being bullish is good and it's safe. And if it goes against me, I'm going to add more to it. So I'm going to generate, some rollover trades. I'm going to look at, adding more positions to it. And, if I've got Key, for example, trading at $23, if it goes from 23 back down to 15, guess what? I'll buy some here. I'll buy some here. I'll buy some here. But overall, this is my low. This is my high. This would be a great level to start accumulating more. And I would stay long in this stock. So there's a handful that I really like to stay in, accumulate more shares, and then exercise some options around that. So if I have, let's say I have 1,000 shares, I'll be looking at trading some. I'll probably sell some calls and collect some premium. I can consider some vertical puts. I can also do some short strangles with some option strategies to see if I get more assignment, take some more credit. There's a few core strategies I'd like to use. If I want more assignment, then I play it a certain way. If I want to just collect some premiums and I'm willing to offset some of the upside, I don't expect there to be a lot of volatility on some of these plays. Okay, UVXY, what do you think about this level? Says Lewis. Let's take a look. UVXY. And I know we played this one last year. Yeah, 462. You know what? Look, and here's the thing. UVXY, is it a, what's the leverage here, Lewis? Do you know? Is this a single or double leverage? I can go, I'm trying to think. I've got that flex stock that shows this in the chart. Let me go to 41 best ETFs. I've got maybe it's this one here. Nope, that's not it. I'd have to check in my flex document, but I was curious if this is a single, double, or triple leverage ETF. If you know, let me know. But if not, what do I like the level? Of course I like the level. It's dirt cheap, But from here, this is what you have to pay attention to, okay? What's interesting is when this starts to go, it's going to go really fast, right? Now, remember, UVXY is moving along with volatility, all right? So what we need to see here, and this is what's crazy. Last week, okay, look at the difference. Last week, the UVXY, if we just measure this move right here, from this low to high, that went up, wow, that was a 58, that's crazy, a 58% rally. Okay. So this strikes me as something that's like double and triple leveraged. That's a 58% move in a matter of 3 days. Okay. And what this uses as a barometer is the VIX. Okay. Which the VIX from last week, let's say that these 3 days we had the VIX going higher, that was about a 70% move. Okay. 60 to 7% on the VIX. So, do I still think that the VIX can go higher? I do. But here's what we keep seeing. It spikes up and just it's almost like if the stock market is a pressure cooker, right? The volatility index is like that knob just has to be, the valve has to be released. We've got to release that pressure because right now it's like so pent up and it's trying to rally higher, but it just can't. And there's not really a lot of domination to the downside, so it can't really overtake the lows. It's not changing any major structure. But what we have instead is like we just have this, pent up play where it's like, got to go somewhere. And it's like the market just panics for a couple of days and volatility gets really high. And they're like, okay, good. So, major funds and tons of money gets thrown into these volatility options. And what happens? They explode up for a couple of days and they get smashed right back down. And I wouldn't be surprised, everybody, if this is what we see happening. It smashes up, comes back down. Smashes up, comes back down. And we'll probably just have this thing settle in over the next, maybe 9 months. Maybe we'll just see price do this. And perhaps we'll see it because we're making lower highs. Maybe this thing just builds itself into like it has to go somewhere else technically. And this is what we had in 2020. It was so low and so suppressed that eventually it just erupted. And I think that, maybe it's not happening now, but over the next maybe 6 to 12 months, this market's going to have some type of just chaotic blow off, let off all the steam type moment. And volatility does return back to this, $40 to $50 area. Now, do I want to trade that? I mean, how much time do I need for that? I mean, we probably need to be pretty flexible. We probably need to have, 3 months on this trade, 6 months on this trade. Because otherwise timing it can be kind of difficult. Otherwise, I'm looking at like dirt cheap options on like the VXX, dirt cheap options, just trade like these 25 to 30 cent call options. And if they spike up, try to collect $1. You can find it. If you pay attention, like go out, maybe 3 to 6 weeks. And if you can find something around current price, get these 25 to 30 cent options. There might be a way to play it where 30 cents becomes $1, make 2 to 3 times your money. It's very possible. Okay. Let's see. Abraham says on the ARK ETF, do you have any targets? Yep. Couple of targets here. ARKK. So on this one, and you were in my session this morning, I believe. My first level is at 130. My second level is up here at 150. 160. I mean, target 1 is back to these recent highs. Target 2 is the same highs we had from 2020. That's it. I mean, and again, this is my low. This is my high. Look at this Fibonacci swing. We had this massive Fibonacci swing. We could see price, current price is sitting around the 50%. We could see price fall back into the 618, possibly the 786. And I would still look at, some accumulation in here to buy some more shares. But if we go back to the highs, that's an excellent profit. If we go, let's say we find this 50 or 618 and we go up to this 18127, highs around like $190 to $200, and do I think, again, it's like, if I'm going to give ARK the credit and they're going to invest in these companies with 3 to 5 year outlooks with major disruptive technology, do I think that it can be higher? Absolutely. Do I think that, what they're investing in with, automation for the world, improving margins, improving business practices, processes, do I think it can be something where the ETF is more valuable because the stocks they pick and the companies they invest in are doing better? I do. And what we're seeing is like the reality is we had this crazy amount of growth and no pullback. This is just the market balancing. That's all I see this doing. This is the impulsive move to the upside. This is correction. And when it's time, we're looking for another impulsive way to the upside. So wave 1, wave 2, wave 3, anything higher than that 2020 high is all gravy, in my opinion. And so that's what I like to do with this. And that's why I'm liking some of these ARK ETFs. Okay, let's talk about some currencies and cryptos for a second. I'm going to go into some of my favorite dollar crosses. Dollar CAD is trading at 2070. Okay, I'm looking for the dollar CAD to start building a base. And I say this, I'll say literally anytime. Like from now until the end of the month. I mean, I understand that there's a certain seasonality to the market. I understand that oil is really resilient right now. Oil's trading at $66.24. We are starting to break this trend line. Okay, but we're just not quite there. Like oil and commodities are still doing well, right? They're not getting pushed lower. It didn't help that we had the dark side hack or whatever, where there's like oil pipeline being held for $5 million ransom to open back their pipeline, but that did happen. We have major resistance here. I see oil technically doing this. I see oil coming back down into this area with a corrective move, finding some support around the low 50s, and then heading higher. All right. If oil continues to stretch and stretch and stretch and stretch, it doesn't change my outlook. Okay. It just means that this needs to break this trend line, and I might have to be a little bit more patient on that. So all I'm watching for oil is if we break this trend line here, I'm looking for oil to drop. If oil drops, dollar CAD should rally. If oil drops, I'm also long on the dollar krone for the same thing. Dollar krone's at 8.25. I've got a chart alarm set here at this recent high at 8.42. I like dollar krone long. I like dollar CAD long. I like dollar Swiss long. Okay. Dollar Swiss waiting for a trend line to break, waiting for price to get on the right-hand side of the trend line. Head back to this monthly target, head back to this nice little pocket, head back into the highs again. I'm looking for dollar Swiss long. Okay. I also like the New Zealand US dollar. New Zealand US dollar, it's having a heck of a time right here. We have a lot of resistance. I think that this is a great spot for this to sell back off. Okay. If it does sell off, great. I'm looking for this trend line to break, start heading back down into these lows, and I'm going to take some profit. Okay. We also could have a high, low, lower high to lower low, and we can trade this down into symmetry for a nice little corrective move. If we see the New Zealand dollar going up a little bit higher, that's fine. I'm still going to sell it here, wait for a trend line break, and sell it back down to the same lows. I still like selling this area, and I like taking profit down here. Okay. The good thing is I already have a robot doing this for me. I'm using my Price Action Pro. This is starting to sell right at these highs. We're already in a position that's in profit, and we're looking for this thing to head back down into previous lows. Aussie dollar is almost the same. Okay. Aussie dollar was almost the same. So same thing. We're looking at this type of structure right here. If it's going to head back up to these highs, okay, fine. We could head back to the highs, come back down to the lows again. I'm going to take profit there as a seller. If I'm selling the Aussie dollar, which I am, I'm looking to be short, targeting that low. If this ends up breaking down, let's say we have a little head and shoulders here. Left shoulder, head to neckline, right shoulder. If this heads down into this low again, I'm going to take some profit. We have previous resistance to become support around 7,400. Great spot to take profit. Because once this is done, I think that this Aussie dollar finds a major level of past resistance to become support, and this Aussie dollar still goes back up towards 8,100. All right. So my hope is this. I hope this thing finds a way to continue to sell off. Okay. Find this previous resistance, and then we have another leg going up towards 8,100. Okay. So there's a good alignment on Aussie weakness for a lot of currency pairs. There's a good alignment on a lot of yens for yen strength, actually. So technically speaking, I still like CAD yen to the downside. This pair is being a real stubborn turd. I want to see this one slide lower. We've got targets like crazy, previous resistance, pockets, inefficiencies, liquidity levels, overbought conditions, divergence. Everything I want to see technically is happening on the CAD yen. All right. However, doesn't mean it's not. Yeah, I mean, it's taking its time. I've got a great setup, but it's not playing out yet. So another one that I'm watching really carefully, another one that I'm going to wait for better trendline confirmation, and then start to trade the right side of the trend line. Okay, so confirmation goes a long ways in some of these currency pairs. Any questions on that? Okay, Swiss yen is another one. This one's down to 120.96. We have a beautiful little pivot cluster right here around 119. Okay, I also think that this Swiss yen can come all the way back down to 116. If it gets, and I want you to take a note of this or a screenshot. If Swiss yen gets to 116, I think Swiss yen coming to 116 is setting up for a bigger sell-off into 114 and 111. So if we break this trend line here, the Swiss yen to me is a very good looking sell trade. Like Zoolander style. It's extremely ridiculously good looking. I like it. Okay, that'd be Swiss yen. We were long last week in Euro Aussie in the flex room. We made some nice profits. We ended up tapping those highs at 1.57. Took some profit. I did turn my robot off on this one. So we have taken, in the last probably month or two, we have had close to 1,000 pips in this chart doing very little price, very little price action, and we made a lot of pips. So I think that the fourth time is the charm. We made money there, made money there, made money there, made money there. I'm good with that because I think all we're really doing on this Euro Aussie is we're just correcting, and this one still slides a little bit lower. Now we could pull back deeper. We could pull back into this area 1.60, and that's fine. But if we don't, I think that we just have correction. We slide down one more time. I'd rather be a part of this trade to the downside and then start buying Euro Aussie at a much lower price. So I think we've done a great job taking some profit in this one, and the same thing is true on Euro New Zealand. Euro New Zealand, I'm looking to get long in this one. You can see my chart alarms. We have been long here for profit, long here for profit, long here for profit. And now I want to see if we can get back into this level. So this might be 1, 2, 3, 4, 5. We have one more leg coming to the upside towards 1.71. Once this is done, I think we can head back down. But I like the structure better on this one. I think we can break these chart alarms on Euro New Zealand, try to take a few bucks out of this one for our Forex pairs. My price action pro is doing a heck of a job just getting us in, helping us manage some profit, and off we go. Mesa says, Euro Aussie for a sell? Not yet. If I'm going to sell Euro Aussie, I'm looking to sell it around 1.60. So my sell zone is going to be here. Okay, if we come back to like 1.60, 1.61, that to me is my sell zone. I would sell Euro Aussie up in that region as opposed to now. Yep. So like 1.59, 1.60, that's where I like the sells. Okay. All right, anything else? EuroCAD I like as well. EuroCAD, I'm looking for something to the upside. There's some amazing levels here with Price Action Pro. Pockets. Okay, we're using this area in Price Action Pro to buy. We're using it to accumulate some buy trades and take it back up into this level. I would love to see this one, find support. Maybe it's, here's our sell-off. Maybe we come back up one more time before we finish this move. Or we go here, we go lower, we go lower, we go lower. We build this kind of falling wedge, and then we take it right back up to 1.50. But basically, I'm long from this region here. I like long on EuroCAD, and I'm targeting 1.51 or 1.53. We just have some incredible pockets right in there. And again, if oil starts to correct and start sliding to the downside, I think EuroCAD is going to be a great trade to the upside. I'm also long on PoundCAD. Current price is 7063. A ton of support in this one as well. Lots of support right there. Lots of support right there. I'm looking for this to head back up into, 7,400 or higher. So I like long EuroCAD. I like long PoundCAD. I like long DollarCAD. They're going to take time. All right. These are not trades I'm looking for profit today. These are trades I'm looking for good profit and injections of profit over probably the next 1 to 2 months. Because these are the type of trades that as they set up, I'm going to find ways to add to my winners. Or I'm going to level myself in and slightly build up my positions so when my profits are taken, it's worth it. Okay. All right. Let's take a look at some cryptos and I'll let you go. Bitcoin sliding aggressively to the downside, 42928 on Bitcoin. We are now, I believe, 40% from the highs. So Bitcoin is down. That is 36% from the highs on Bitcoin. Impressive. Okay, now I talked about this earlier. I have a YouTube session every Monday and Friday at 9 a.m. This high to low, lower high to lower low. It will be interesting how aggressive this gets. If we start to see, a more aggressive sell-off, that's fine. Just let it fall. Wait for a trendline break. Wait for 30,000 or 25,000. That's the mining costs on Bitcoin right now. Be patient. But do I think that we build? I mean, remember, we went from essentially 10,000 to 60,000. It's the same thing going. I mean, listen, this is what's crazy. $10,000 to $60,000 is a 6-fold increase. We also went from $3,000 to $20,000 back in 2017 and 18. A 6 to 7-fold increase. So it just so happens that from 2018 high, we came all the way down like 80% in a correction phase. So we might do the same thing here again. And everyone that's like, oh my gosh, I can't believe it's falling. Elon Musk is like the biggest cheerleader of cryptos, and how's he letting it fall? He's not doing anything, right? Technically, this crap needs to happen. Technically, you shouldn't see a market go straight up for weeks and weeks and weeks without having some type of pullback. And if you don't believe me, Find a broken market. Look at lumber prices. Look at lumber prices right here. Okay. Lumber is at $13.27 after a 100+% rally right here. We've gone up 100+%, 107% in the last 2 months in lumber. We're finally starting to just correct. We're down 20% lumber, right? I bet builders are happy. I bet, futures markets are loving this because there's finally something where if they want to keep this bull market going, they can buy at a better price. But it was a much needed correction. You take a look at this on the weekly chart, you're just going to see like 8 straight weeks. Look at this ridiculousness, right? 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row, straight bullish on the weekly chart. Market moves in waves, traders. If you go to Ethereum has been outperforming Bitcoin like crazy this year. 1, 2, 3, 4, 5, 6 weeks in a row, all bullish. We got to get a correction. So we are seeing that it's finally happening. So I like the fact that we pulled off the highs. If I'm going to buy more Ethereum, I love it. I love it back here around 2,800. If it comes a little bit lower than that, 2,500 would be great. But let's see if we can have a correction, find some support, and look to buy more. I like Ethereum long. I like Ethereum long term, right? So I'm looking at 2,500 to 2,400 levels. We still have a yearly pivot at $529. So if I'm going to add more to Ethereum, I'm not adding super heavy right here. It's going to be a position. And if it goes against me more, I'll probably take from this level all the way down to that pivot and I'll split it in half. This would be position 1. This would be position 2 around $1,600. And then position 3 is around $500 at that yearly pivot. Space out my trades. If I want to throw another $1,000 at Ethereum, I'm going to go 300, 300, 400. And I'll just buy $300 worth of Ethereum at this price, buy another $300 here, and then buy another $400 there. There's my $1,000 add-on investment over the course of, let's say, $2,000 worth of price movement. Just level it out. Okay, looking for pullback to add position? Yeah, that's fine. That's great. I'm looking to add too. Litecoin, same thing. Okay, Litecoin is really a good amount off the highs right here. So we're 37% from the highs on Litecoin. Okay, can we build a base? Sure. I hope we do. I hope we end up finding some levels in here on Litecoin. Let's say it's around $250. Okay, Litecoin's mining costs, by the way, are creeping up towards $200. So if this one comes back to those mining costs, maybe we build this base right around $200, and that's a good position to consider holding Litecoin. Okay, or adding to it. I still have Litecoin in from like $40, and I'm still holding, and I'm still looking to add to it. But I just need to see some better prices. Okay. All right, traders. So we've covered some cryptos. We've covered some Forex pairs, a lot of dollar stuff, a lot of yen stuff, good prices on the EuroCAD, PoundCAD, covered some stocks, stock market, what could potentially rattle this bull market. How much is the market willing to fight? The bulls and bears are at a battle right now for sure. And those lines are being protected. The bears are having a hard time overtaking those major lows, and the bulls are having a hard time pushing to new highs. So in that sense, what you're noticing that Tyson and I are doing in Equities on Demand, if you're in those sessions with us, we're playing a lot of directionally neutral trades. We've taken, I think, 4 trades. We call it a Master Blaster strategy. We've taken 4 trades in the last 2 weeks, and we've just inched out these little 8% gains, 10% gains, 12% gains, and we just keep taking profit, adding more, taking profit, adding more. So I think over the course, let me look at this spreadsheet here. So Master Blaster, I'm just looking at my screen. So we have 16%, 4.5%. We have a 9%. We have another 8%. We have another 5%. In fact, I made 10% on it today. So collectively, 10, 8, 9, 9, 4, and 16. We have over 56% profit on our positions over the last 6 trades. And those are directionally neutral strategies. So that means it doesn't matter if the market goes up or down. As long as it goes somewhere, we're able to generate some really nice profits. Okay. Cool beans. Okay. All right, traders. I'm going to go and wrap it up there. Thanks for being with us today on AAA Ask an Analyst. Again, make sure you share this video. Make sure you pass this along. This is good information for anybody. We'd appreciate it if you can hit that thumbs up button for us, like these videos. That helps the YouTube algorithm for everyone watching. If you smash that thumbs up button, likes up button. If you hit that button for us, it helps. That way, however many attendees we have, however many people watch the recording, watch the session afterwards, it all helps. It helps this video right, get to other people. Anybody that's looking for help in trading. Anybody that's looking for help in trading and investing. What decisions to make? What are you thinking about the stock market? How to be ready for things. How to be nimble and agile, right? I mean, right now it's like, it's important to be into multiple asset classes. It's important to be diversified. I'm happy that I trade stocks and options and cryptos and Forex. Because if my production and my profits were fully dependent on one asset class, I'm going to sit through some boring times. Like my Forex trading right now I have some near-term profits. I'm sitting on some positions. I'm looking for really nice profit chunks to come in the next maybe 1 to 3 months. But as I'm waiting for that, I have trades I can take every single week in stocks and options. In my cryptos, I sold off and bundled some of my profits into Bitcoin, and I put some profits into dollar cash. And I'm again, like one asset class can outperform while I'm waiting for others to pay. And at the end of the day, as long as my assets are profitable, then I'm just happy to have a chance to trade all of them. Okay. All right. So again, join us next week. We appreciate the likes and the thumbs up. That goes a long ways for us, and that helps the YouTube algorithm to get this video out to more traders. Thanks for being with us. We'll see you next week. Hopefully, Tyson can join me next week, or we'll have Tyson, Tad, and we'll talk about, get a little group conversation going. But I'm happy to run these sessions every single day or every single Monday. And don't forget that I also run a YouTube session on my own channel, youtube.com/Chris Pulver on Mondays and Fridays. That's a Pulver Report at 9 a.m. Okay. If you'd like to learn more about options, so Abraham's asking about options, take a look at a couple things. So Abraham, if you go to my YouTube channel, youtube.com/Chris Pulver, check out one of the videos like my Friday video from last week. Friday's video from last week, go into the description of that video and you'll see that there's some information on equities on demand. I have a webinar you can watch. That's a webinar that we did, a couple weeks ago. And if you want to learn more and watch what we do, check it out. It's just a free webinar to see. So that's one way to get some information. If you want to contact here at Market Traders, you can certainly do that as well. Okay. All right, traders, have a great rest of the week. See you in the Flex Room. See you this week in Equities on Demand, and look forward to seeing all of you and trading with you. Okay. Take care. Talk to you soon. Bye.